Hi traders, welcome back. I guess I should be welcoming myself back because I was on leave last week. So it is. This is Sunday the 10th of April, and I'm recording this for the week commencing Monday the 11th of April. So let's kick off. The fundamental concerns at the moment. This is now April. We're in Q2. Is U.S. inflation is actually looking pretty stable. There's been, well, to me, I've heard no rumblings just yet. If we can keep it at this point, I'm relatively happy. It's if there's a big jump to something like 9 or 10 or something, then there's going to be some big concerns. So it's the rate of change that really worries me. Is it accelerating, staying the same, or not? We've still got obviously Russia still attempting with huge amounts of propaganda to convince whoever they can that somehow they're the victim, which is just classic. And so but at this point it looks like Ukraine are doing okay. They're just obviously needing major military support. We'll see how that goes, but I'm optimistic, so that's great. U.S. democracy is still under threat from the Republican Party. This is obviously a big thing. So most people don't really appreciate that if the U.S. becomes an authoritarian state, then this is obviously a global threat. So, and this is something the Republican Party is very keen on doing. And so they've got midterm elections in November, and there's just so big concerns. Just keeping an eye on that and that'll impact the world's economy. So this is why it's so important. Inflationary risk continues, but it's pretty much the same. And then of course climate change danger, which is an ongoing threat, but it is now reaching kind of almost beyond tipping point and major changes. So everyone is aware of this. These are, this isn't necessarily a good newsletter, but these are things that we can actually fix and resolve. And the question is what's going to happen about those? Okay, so that was good. What else have we got in terms of economic calendar this week? It's a busy week. There will be lots of volatility. The markets are going to swing wildly. The things that I'd be paying the most attention to will be monetary policy discussions in terms of how inflation is impacting other countries. And so this week, for example, Thursday, there's a lot on the euro. And so I really want to see how the market responds to that. In other words, what's the fear of inflation? I think the US is going to manage to keep it under control. I'm not convinced the Eurozone, including the UK, are going to be able to keep it under control. So ironically, I think the US is going to be okay. I think the rest of Europe, we're going to have to see how that goes. That's it. So let's go to the charts and see what else is going on. Okay, so let's have a look at the Volatility Index, the VIX. We've dropped back down to around the 20 mark. We're still, I would expect it to recover from here and push a little bit higher. But overall, there's really not too much to tell. MACD is trending higher. General trend is drifting higher, but there's nothing. Even considering the fact that that such a major war broke out, it's managed to have calmed down. So there we go. Nothing too important there. Dollar index, just marking that, or just commenting that we hit 100. We've got that strong rejection. We haven't been there in a while. There is a very fair or reasonable expectation, I think, to see this week that we have a bit of a pullback from that. How far will be the question? Will it come back down to the top of the range or a little bit further? But I would say it would be reasonable to have a reaction off that. We haven't really been here since 2020 and 2016 prior to that. Okay, so this is a relatively, I would say, major round numbers significant, and so we have to see how the market responds to that. We've got euro dollar down here close to 1.08. So possibly this week we might see a tap 1.08 again, or over the coming weeks, and then see bullish divergence, but we can see a little bit of that coming in here and then see a bit of a reaction off that week. So this week could see some reversals across quite a few of the pairs, seeing the euro strengthen, for example, looking to see GBP as well off that level. So what I'm going to be looking for in the early stage of the week is to see a break of these highs on the 4-hour, if that is going to be the case. If, however, the resistance levels hold, then I would expect continuation to the downside. So in other words, I am preparing here for the possibility of a reversal across the board. If we get that dollar weakening, we're going to see strengthening in a lot of different areas. Just highlighting here, for example, that Aussie dollar, US dollar. Look at that strong rejection candle back off these old highs previously, and a lower high here, but also that strong level of resistance. And so we've already broken the daily uptrend here. So the question is, are we going to resume it? Are we going to come back down to these lows here? So there could be some really great trades this week on the back of the weaker US dollar. So we're looking for that. Again, let's just say that, say Kiwi dollar here, just look, lots and lots of rejections over here. Big, strong, bearish engulfing rejection candle on the weekly, and a lower high on this monthly chart here. So all of this indicating that the trend could very well continue to the downside and therefore support the idea of a weaker US dollar. So what would I expect to see if that isn't going to be the case? So if I go across to say euro dollar, for example, then I would expect price to continue and break below that 1.08 level. Then I'll be looking for continuation trades to the downside. But so far the market appears to be leaning towards a weaker US dollar, at least initially. This is where it gets kind of interesting to me. We've had an incredibly bullish dollar yen. And so we are creeping back up. We're going to tap. It looks as though we're going to kind of, this is really going to be the area this week that I'll be looking for. There was just a nice little day trade that had been taken that has obviously closed out now. But yeah, I'll be looking to see if there's any, if we get a second strong rejection candle off this area, then I'll be expecting a reversal from that this week. So again, there could be some good opportunities there. Dollar Swissy is just struggling where it is. It's largely, it's garbage in terms of trading opportunities here. It's drifting a little bit higher, so it is strengthening in that sense, but actually there's also a bit of a rejection off here. And again, it's range bound, so there's no reason why it couldn't go back down to the bottom of that range. And then dollar CAD as well continues to sort of be drifting low. There's a nice little bullish engulfing candle here off these weekly lows here. I need to actually put a marker level in there. And generally it is sort of range bound. So again, this is actually likely to go anywhere. And so I'm not really looking for trading opportunities there. I'll be focusing on the other ones that have clearer trends. Okay, so onto the currency, the mixed currency pairs. This is what I'm going to be looking for this week. It's unusual because I normally look for trend continuations. I'm going to be looking for trend reversals for day trading opportunities. So starting to get a bit of bullish divergence creeping in here on the MACD. I'm looking to see if price can break these highs and start to trade a little bit higher. So the ones that I like the most are going to be Euro Aussie. We've had a big move down. We're at a monthly support level. We've had quite a big move down, and actually just a bounce off this, certainly back up to test this level for resistance, which is quite high, could provide some really good day trading opportunities. Of course, it is still in a downtrend, and therefore it is just as capable of continuing down. But if I do start to break above these highs and start to see more of a bullish trend on that 4-hour, I'm going to be looking for buying opportunities. And same again on pound Aussie. It's looking really good. It really just has to break these highs, and then that daily downtrend is done. Weird straight line sort of consolidation on the 4-hour there. It is on a monthly level here, and so therefore could find some support here. And it has had a really long move on the weekly with a strong rejection off the lows. The weekly in isolation is a really good case for looking for a bit of a correction back into the middle here of this larger range. And so this is something I'm looking forward to. I want to see if this happens on the 4-hour. So we're looking for a consolidation breakout to start off the week and then heading up to 1.78. So quite excited about that if that is going to unfold in that sense. And then Aussie Swissy, for example, you can see there's a nice little double rejection here off these levels. Strong bearish rejection, nice wicks over there, depletion, exhaustion. If we break this low, it makes a lot of sense that we're going to head down towards 0.67, and we've got a bit of bearish divergence as well. So you can see the weekly rejection candles over there. There's a lot of confluence, and as well here on that 4-hour here, there's a lot of confluence supporting the idea, certainly if we break these lows, that we could see moves to the downside, and therefore a nice reversal, but a lot of pips that could be taken in terms of trading. And I very rarely measure pips, but it's a good indication of the kind of distance that I think we could see if we get this. It gets a bit trickier when we look at, say, Aussie yen. Aussie yen is heavily overextended, in my opinion. It's been incredibly bullish, but I'd like to see if we break these lows. I would anticipate, I think reasonably, that there would be a strong correction down to 86, for example. So these are possibilities. I have to say, I'm just obviously across the board, JPY crosses are looking ridiculously bullish. But I also know the Bank of Japan doesn't really like their stuff to run away like that. So we're going to have to see how that goes. And it is a possibility that could happen. Just a bit of a correction on that. Now, Kiwi CAD, last one on my pairs crosses list. This is just producing these lower highs in this range, coming back down, closing near the lows here. And also with the lower highs here on the monthly, and looking at though it wants to come back below that 0.86 level. So this is what I'm looking for. This looks bearish, a really nice downtrending MACD. For me, this usually implies a breakout to the downside and therefore moves down towards 0.84. So there could be some really good day trading opportunities on that. But this in isolation traditionally is a very strong bearish breakout pattern supported by a trending lower MACD. It indicates a bearish trending MACD that it wants to break lower. So that's nice on my trade list. These are at least quite a few, but there will be some the risk increased on the Aussie crosses there as well. So just exercising some common sense and caution there. Okay, so on to the commodities, and look at the S&P Global Commodities Index. We've had a nice little consolidation lately. What I like about this is it proves once again the markets cannot necessarily go in one direction forever, and that we are due for corrections. This very much looks as though it's either set to stay where it is or perhaps have a deeper correction down towards 600. So let's move on and have a look at some of the others. Yes, if it breaks the high here, at 7:48, then I'll be expected to attempt to resume. It's had a bit of a consolidation and therefore it's valid, but it has formed effectively a triangular shape and it can break out in either direction. And it's starting to creep down towards the lows that is still overextended on a monthly basis, which is why I say it's a 55% chance it's going to head lower rather than higher. So let's look at gold. I'm currently just in a long trade on gold off these double rejections here, looking up towards 1955. It's not necessarily guaranteeing that it's going to break out beyond that. There is some respectable resistance here, but overall the monthly looks pretty good. We've got a bullish candle, then a bearish candle with a rejection, and then a nice little bullish inside candle at the moment. So all of this hinting that there could be a nice breakout. 1955 appears to be that wall that it has to break through, and then it does look as though it wants to kind of continue going back up to the highs. So this is what I'm looking for. There could easily, just as easily, be a rejection of that and head a little bit lower, but if we do manage to break up above 1955, then I'm expecting us to head back up towards 2000. Silver, okay, so silver is just a little bit more bearish. Lots of rejections on the monthly. It's not as strong, but it has produced a weekly bullish candle on the moving averages here. It is also potentially off those old highs, finding support where there was previously resistance, and therefore there is some possibility it can work its way through and go up to 27. So again, it has to get past these barriers first, but I'm optimistic on those, and they look okay. Copper creeping higher. It's just very volatile and messy here. Look at this 4-hour chart sideways. Nigh on impossible for traders to trade and navigate. Also looking a bit weak here. It's struggling with those levels. But you can see, look at that monthly candle. Actually didn't get such a strong rejection, and therefore a continuation up here is good. But I prefer for candles. To come down a little bit lower and then test a little bit higher. That'll give us stronger breakouts. I'm not really seeing that at this point in time. Natural gas. Natural gas back up at these old highs over here. So you can see it's been incredibly volatile. It is starting to push higher. Natural gas, to me, any kind of pullback here would, to me, reasonably represent some continuation trades. I'll just keep an eye on bearish divergence. We've kind of moved up to a new high here. There's a strong level of support here at 6,000. And so therefore we can continue on from that. But yeah, it's overall that is looking more bullish than anything else. Let's look at crude oil. So crude oil is taking a bit of a knock back, strong rejection off those highs. Principally, I'm still relatively bullish on this, but I must say we've got a bearish MACD over here, and a break of support here could provide some good shorting opportunities to the downside. Remember, I'm a trader. I don't really care which way the markets are going. It actually doesn't matter, but I'll be looking to benefit from moves to either side. If we do find some support here, we start to break up above these highs, then I'll remain long on that. But I'm actually liking the look of gold over crude oil at this point in time. We fell through this level of support, so this is now looking at Brent crude. We're still currently potentially producing a slightly higher low. But it's also forming a bit of a triangular shape there, and then could potentially break out to the upside. But just looking at this rejection, it really doesn't want to come back just yet. So it does matter to me whether this closes as a red bearish candle, and a bearish inside candle, for example, could lead to a break, a swing high, and then a correction to the downside. Could very well happen. So really what I'll be looking for, I think, this week is breaks below the low. And at these lows here to see if I'm looking for shorting opportunities down towards these major levels. And alternatively, we start to break back up above that 109 level, 110. Then I'll be looking for continuations to the upside. Right, sugar, which was a nightmare in terms of how messy it is, has now finally resumed that uptrend, and very aggressively. It's now back into these old highs, but it's closed right near the high. This is certainly keen on continuing to the upside there. And so there we go. It's next major levels here. We're going to push it up towards 25. And so that's what I'd like to see if there's some good opportunities on that. So any pullbacks into these levels would be really good buying opportunities, and even for day trading opportunities, looking for longs on that. Coffee. So coffee has managed to find some nice little support here, is creeping a little bit higher. But this area is this is a challenge for it. I beg your pardon, I couldn't find the right word in real time there. So definite depletion. It's going to find some barriers to entry there, but it does look as though it wants to continue to push up a little bit higher. It has got an uptrend on the daily. Coming back here, we've got a high low and a break and a retest of this level. So this is a good continuation trade up to 250 there. Wheat. All right, so wheat overextended, very similar to crude oil, and some of that were, overreached on that initial news of Russia invading Ukraine, and so we've got a nice little bullish candle here. Break of the high, this would be a bullish continuation signal for me to the upside. Cotton, trending very well. This, however, is a different type of reaction at 140 than we have had in the past, and could imply the price is going to take a knock a little bit further down towards 120, a little bit lower, then maybe break this. It's also heavily overextended on the monthly. Okay, so all of that just saying possibility for a deeper correction does actually would make sense, especially if we come down towards these highs. So initially, early part of the week, I'll be looking for moves to the downside. All right, so on to the global indices. And because I skipped out last week, I wasn't here. I've kind of tried and pick this up again. So nice little bullish inside candle here. I'm still waiting to see if we do break the high. We don't have to. There's nothing that says we are, the market is forced to do that, but you can see it's roughly stayed where it is. And so this week it's found some support here. I need to see it break these highs here. Then once we break above the high of March, then I become more bullish, certainly back up to these old highs at the very least. Beyond that, we'll have to see how it goes, but that would be a simple, straightforward thing. If, however, we've got these sort of lower highs here on the daily and we immediately start to break below these lows, I'll be looking for shorting opportunities cautiously down to the 33 level. What's going to be interesting is we had a lot of these strong bounces off those levels in the past. If we start coming back down here, what's going to happen? Are we going to have solid closes near the lows, which would show that the buyers who were pushing back here are not here anymore, and that has implications going forwards into May and June and July. S&P as well, so a little bit of a setup here that just triggered and failed, so that all makes sense within a potential lower high. So this level here possibly acting as strong resistance. And so the question is, are we now at the beginning of perhaps a longer term correction in the markets or not? Well, for me, the clue is if we break back up above the high here, which puts us at, let's get an actual number to that, the high at 4631, then I become bullish back into the old highs and the trend starts to resume, especially if the candle sizes start to shrink in terms of size over here, then I maintain that bullish stance. So I'd need, alternatively, should we just break and come back down to these levels, then we'll have to see how it goes. But again, I also like a candle that can come back down to 4.3 and then recover back from that. So the question is, where will we be by next week? But this week, first of all, I think it makes sense to see if we can expand a little bit higher. Let's look at the Nasdaq. So the Nasdaq, obviously finished lower, 4 lows last week. We've got lower highs, low lows. We've got a downtrend there. The game isn't over necessarily. I want to see if we come back down to 14,000 and then recover. But we've got quite a strong series of rejections. So we just have not broken that high. And that is a significant thing. If we break the high of March, we are then likely to return up to these highs here. But in the meantime, it looks as though we're struggling, we're staying where we are, or creeping a little bit lower. So I'm very cautious. I'm happy to look for intraday shorts to the downside, but it means a lot of volatility because of swings. Shorting in the morning in the UK, and as the US comes online, the market suddenly rebounds. So just exercising a lot of extra caution here. This was just a random line that I drew in across these old highs. I noticed we're back on the outside here, coming back into an area here we could find some support and go. We've got an inside bearish candle at this point and a bit of a break here. This in isolation looks as though it wants to come back down to 1925. It's found some strong resistance here. So I think it's very fair to say this is the mini Russell. If we do reverse this coming week and break up above 2150 with breaks above the highs on the other charts, I would say we're way more bullish at that point going forward. We'll see if that is going to be the case. But then again, look at the FTSE here. The FTSE has gone to all-time highs. Look at that. So again, we've got the US wobbling a bit while the UK is actually not looking that fearful. And that is something that does not happen very often. So that implies that there is strength in the global markets despite what it might look like. The DAX as well, let's see. DAX is staying where it is. It's managed to bounce off the lows. It's not as bullish as I would like, and it has rejected this 14.8. So again, I want to see us break back up above that to really see that bullishness come in. Alternatively, we're going to drop back down to this 13,000. There's still huge amounts of danger as a day trader to be trading this because it hasn't settled in either way, whether it hasn't settled into a bear market or to a bull market yet, either way. The daily here on the EUROSTOXX just really very much a mess, but finishing up a little bit more bullish and actually does appear as though it wants to go a little bit higher. So again, it's starting to just breach the last one's high. Again, looking more bullish. So interesting to me to see there's definitely some bullish signs in the market here. Strong bullish candle, still hovering around this 27,000 level. I need to see us come back up immediately this week, by the end of the week. Nice bullish finish. Let's see if we do that. Alternatively, if we finish near the lows, there's some caution there. So where am I going with this? I'm saying that this week it means it's going to pay to be very cautious and tighten that risk management for myself at least, very sort of trade defensively, more so than I normally would if I know we've settled into a nice bullish uptrend or whether we're bearish. I'm seeing mixed signals here, which means heightened awareness or just heightened cautiousness. Okay, so finishing off on the ASX, Australian ASX, we're back up at these highs, struggling a little bit here, but that's my point. Look at this. We had a really nice bullish finish back up towards those highs. What's going to happen here? So we're getting mixed performances around the world. That to me is a good sign. It's not necessarily a bad thing. The US could surprise us and recover this coming week, and we can see the rest of the markets head up a little bit higher. Okay, moving on to the equities of interest. Royal Mail continuing to push near the lows, but now it's starting to put the brakes on. It's got clear bullish divergence. This is now very keen on pushing it up a little bit higher. So let's see if we do get that swing low here and close up a little bit higher here. We do have continuation bearish momentum on the MACD there, and we do have a downtrend on the monthly. But we could finish with a potential indecision candle and then see this shift around in May. We'll see how that goes. Amex. So Amex hovering near its highs. It's coming back down to test this major level. It had a nice little solid bounce of it. I want to see this week if we can finish higher, close higher this week. There's no overall trend in place here. It's really just stuck with this. But what I would highlight here is that 50 still continues. 50 moving average continues to close higher. There's not much clue here other than looking at the price action off these levels and the reaction. Should we close lower here, then we will see this reflected in the indices. I'm expecting to see if we can push a little bit higher on this. We'll see how that goes. I'm always find it safer to be optimistic about the equity markets rather than pessimistic, because their corrections happen anywhere from every 8 to 15 years, but they tend to be bullish every other period of the time. So I'd rather not be bearish most of the time, because that's how people destroy their accounts. So we've got a strong potential, another rejection here of Apple off these highs. This doesn't really surprise me, but I would say that if we do break above this again, if we break above these highs, we're going to see a nice strong continuation to the upside. We could just simply be seeing a consolidation here for 3, 4, 5 months and then a break high. This could, in fact, that could even happen where it goes all the way through to July, August, and then kicks off later on in the year. So again, caution in this for trading purposes. It makes it very tricky. ARK. All right, so ARK has pulled back in into the moving averages, fanning out to the downside, and looks as though it's very much continuing its move further south. However, I would say the brakes are coming on here. There's clear bullish divergence there, and so for me, I do think we're at the end of the road here. But what I would like to see is to see us break above these highs. Break above these highs, I would think then we'll see an acceleration to the upside. I'll be looking for that. Until then, of course, there are very real possibilities to come back down to these lows, continue to diverge, and have another rejection off that. But it is now certainly on the cards for it to attempt to reverse and go higher. AT&T consolidating has largely stayed in this area. Look at this. It's just stayed in this area all the way going back to February. Not really doing much, but it does look as though it's going to stay above that level and push a little bit higher on that as well. Let's go through to Berkshire Hathaway. Berkshire Hathaway, beautiful pullback and a nice little bullish weekly candle, but I do think we're due for a bit of a correction now, so we might find that it bounces off the top here and then comes back down towards the 324 level. But overall, looking just super, like, just what a star performer. What an absolute star performer. And this is quite a bullish signal. So it is possible during periods when there's a lot of confidence in the markets that this would be a swing low, and we just see a continuation from here. That can actually happen. The price action itself looks independently bullish. Okay, BP. Also looking like it's setting up to be a bit bullish this week. Overall, monthly, it's going to take another run at that 32 level. All of that looks more bullish than bearish. ExxonMobil, also bullish, no doubt about it. Look at that, bullish, 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 higher trend, uptrend, moving averages all fanning out. Nice little price action there, pushing up, disregarding this rejection over here. Bullish pretty much there. Coca-Cola, also look at that, just solid, bulletproof. Okay, also very nice. This is a major contributor, obviously, to Berkshire Hathaway, but look at that, definitely working its way to the upside there. And General Motors. Okay, so I was talking here a little bit about that continuation to the downside. And so far, looking as though it might want to do this as General Motors, not really finding much support where it is here. If it doesn't recover this week and get back up above these highs here, then it's fair to assume it's going to head down towards that 32.7. So far, this one not necessarily looking that strong. Here we've got a potential higher low, and therefore very not unreasonable to see JP Morgan Chase is going to find some support in this area and head a little bit higher. That's a very real possibility. I'd like to see it close up towards 144, and I've marked it with a green box saying this is a really good area for it to turn around in. Meta. Okay, so Meta, there's some big news on the horizon about some massive lawsuits that they're about to go through, which could turn out to be a huge nail in the coffin for them in terms of corruption, or just a whole lot of other stuff. But so I've looped it on my Twitter accounts, and all the lawsuit submissions are in there. It looks fascinating to me. Are we going to see a continuation? So this week, what I'm looking to see is if we see a break of the low here. My expectation is this would continue to head lower, but all the signs are here independently. If that news wasn't what I had read, and therefore if it's not really relevant, the market is in a position here to potentially rebound. We'll see how that goes, technically speaking. Anyway, Morgan Stanley back into this. This is a great area for it to turn around in. So it had a breakthrough of support here, attempted to come back up, another rejection to the downside, still bearish in that sense. And so actually here in isolation, this looks as though it very much wants to continue to the downside. What I do want to mention though is it did find a little bit of daily support here. There's definite bullish divergence on that as well. And we're in a really good area for it to turn around it. So what to me would be significant is to see Morgan Stanley close up higher this week. If that is the case, that would indicate the following week we're going to see a bit of a reversal. So this week could be one of those things where across the market, they either tread water or potentially finish a little bit higher, but we don't see any significant big moves to the upside. Look at this continued bullish divergence over here. It's consolidation, very bullish at this point in time. And also all the breaks on this. This is desperately trying to stay above that 375 level, but all of this on the weekly actually looking more bearish than bullish. So it'd be interesting to me to see if we do see a drop down to that 300 level. But I'm saying that it also would not surprise me if we saw a break and a close above those highs this week as well. But that does, again, in isolation, there's definitely an area of support here, but that isolation looks like it's kind of interested in, got its eye on going down a little bit lower. NVIDIA. Big drop, obviously, this last week, back into this area and struggling to find a bit of support here. In terms of the monthly, it's a good area for it to turn around in. But I have to say, the fact that it didn't break the high, or it hasn't managed to do it yet. So far what I'm seeing here is that there is that attempt. There are buyers, but maybe not enough to turn around. This is really interesting to me, having been away for a while. Big correction to the downside on PayPal, also struggling a little bit over here. I want to see a break above and close above these highs over here this coming week. Bullish divergence again, but bullish divergence can very most of the time be an indicator of price, at least to attempt to climb higher, but you can have continued attempts and failures while that bullish divergence gets either more bullish or continues to give you multiple divergences, and then ultimately price consolidates and carries down, and all of that really goes away. This is really an indication that price is overextended and must either consolidate or change trend, and that is what it is potentially doing. It's either going to tread waters until that divergence has worked its way out, or it's actually going to start to climb a little bit higher. So if we are at the beginning of an ongoing bull market, these corrections represent blue chip buying opportunities for potential shareholders. Alternatively, we're at that beginning of that longer term correction. And again, as I said, I have to give it the innocent until proven guilty that it's going to be able to recover from that. Again, you can see a lot of these weekly charts have got this kind of bearish setup here at these resistance levels, looking like they want to continue down. Look at that bearish rejection candle over there on the monthly. So this also looking like potentially it wants to break these lows. So we're looking for it to break these lows for continuations to the downside on the 4 hour, or alternatively to get back over and start pushing up at the top there. So it is going to be certainly reasonable to watch from the sidelines rather than just make assumptions just yet. Again, same thing. Pull back into the moving averages, bearish candle here, break of the low. This to me is a continuation to the downside. Alternatively, if it doesn't break the low and goes up, or you get a bullish engulfing candle, that is then for next week to pick up and to see where it's likely to go. Okay, so Tesla has come in. This was a good place for it to turn around, but I must say this bearish monthly candle so far does not necessarily bode well. It is a lower high on the weekly chart. Could potentially come back down and test this 900 level again. And if that is the case, all of that is then starting to add weight to the case that the markets could be in for a bigger, longer term correction. So conversely, the only way to really convince me that that isn't going to be the case is to see them just unexpectedly close much higher this week. All right, to inject a bit more enthusiasm into it, because I'm seeing a lot of here, finishing off with Vanguard, seeing a lot of it finding resistance at these major levels where it should be able to break through on those, and we'll see how that goes. Okay, so let's go through onto bonds. Let's go through and have a look at those. Let's look at the 10-year T-note. So these really just heavy sell-off, which, you know, on one hand can be an indication that shareholders are not really ready to start buying. They're not ready to shift away from stocks. So I find that interesting as well. Heavily bearish, continues to do that, but starting to slow down a little bit over here. So this week, if that is the case, we'll see if the markets head lower, then I would expect these to start putting on the brakes. But so far, it doesn't seem to be showing any signs of that. The Euro bubble as well, creeping low. Look at that strong bearish rejection candle there. Heavy, insanely big bearish candle over here as well. All of that just showing The market's been going up for quite a while and starting to not really find much love and head a little bit lower. Eurobund as well back into this level of support in this area. I want to see if that's going to be the case, if this becomes significant. Okay, let's finish off on those cryptos. So cryptos again intricately tied, joined at the hips, partners in crime with equities. So again, if if equities are bullish, I'm going to expect to see cryptos back up above these highs, back up above 46,000. If not, we're going to start to break below these lows. So all of that is pretty much tied together. We'll see their fates are united. We'll see how that goes. But it is looking, overall, it's looking relatively bullish. I do quite like the look of some of these charts. We've got some really nice performance coming through on the monthly charts. And so, again, I'm optimistic, but we're just creeping along. And what could actually happen is we accelerate. We suddenly, creep along and then break through, head up. Possibly something could happen where, for example, the Russian invasion, Putin pulls out. And obviously, I think that he's just going to bide his time and try and do it again. So naturally, what should ultimately happen is he should be arrested and tried for war crimes against humanity. And so absolutely, he should spend the rest of his days in jail. But we'd have to see how that would ultimately unfold. But that could create a bit of a boost into the markets. It could be something that really just creates that optimism. And also, we're entering summer. And so summer something always boosts the mood. And we'll see how that goes. So finishing off with Cardano. Again, we're still sitting at this level. And so again, the markets are at that fork in the road. They really could be either way. I've got to keep an eye on that 4 hour to see which way they go. Could even end up being a volatile week where it attempts to break down, bounces, attempts to break up, bounces. Could be that. So certainly for me, I think it's better for me to watch from the sidelines, wait to see towards the back end of the week which way it ultimately looks like it's going to go, and then possibly look for some shorter term trading opportunities. That's it, ladies and gents. I want to wish you a wonderful week, and I'll look forward to chatting to you in next week's video. Thank you very much.